So here's an interesting article once again from Zero Hedge. Here's a shocker. I'm telling you, Zero Hedge is all over anything and everything financial, political, markets, precious metals, commodities, you name it. They got a nice article here, which again, a lot of times if there's like a chart of something where there's timelines and things, and you can see like another blip starting to come up, like right now, you look at the previous ones, that has, holds a little merit, if you will. And I'm going to show those to you in a second. According to these two charts, a default cycle in the United States is now inevitable. Now, first off, let's talk about that for a second. According to these two charts, a default cycle in the U.S. is now inevitable. I'll be honest, I don't think you or I need to even see these charts to understand that defaults in the U.S. are now inevitable, or what they're calling a default cycle. And all that simply is essentially lots of defaults happening. Therefore, if you look back at the stock market crashes, which I believe these charts are timed perfectly with, at least these spikes in the charts, do you have default cycles? So stock market crash, economic collapse, default cycles occur. I mean, now that's obvious. You can't have those without the other, right? You don't have an economic depression or collapse while simultaneously defaults are normal. And when you look at the amount of damage sub $30 oil is causing, it could be $40 or $50 a barrel oil, by the way, and there would still be devastation. The same companies that you keep hearing about, or even the new ones, oil industry, and you have the oil industry here with the producers, but then you also have drillers, and you have all these subcomponents. Like many industries. For example, you have a grocery store. They don't grow the food at the grocery store. No, they got the growers out in the fields. They take it, they sell it to one of my favorite grocery stores, Publix. Publix puts it into the trucks. They package it first, put it in the companies do. Then they send it to Publix, big warehouse. Then they take it from there, disperse it throughout their stores in Florida. And if something that was absolutely critical to Publix surviving, then all of those subcomponents, which are individual companies, if you will, are going to be hurting too. Because if Publix goes down, then all the truck, which they own their own trucking company, but other companies don't have their own trucks, some bigger companies, they hire people, right? Hire subcontractors or just another company to do the trucking. So then that company is hurting. It just starts a chain reaction. The farmer, the producer, they start hurting. It's just a kind of an analogy, example, if you will. But when you're talking about oil, if oil ceased to exist today, it just got stopped, it shut off, the mass casualties of deaths across the planet would be unprecedented. It would be the equivalent of the doomsday scenario, giant asteroid meteor slamming into Earth, destroying, 90% of the population or something. That would be what would happen if oil stopped today. If one supermarket, my example, Publix, had a big problem and collapsed, wouldn't be catastrophic. Plenty of other supermarkets that would love that, as a matter of fact, and take over, open up some more stores to take the shortage of grocery stores, or that used to be Publix stores, and then they would just, take over. But again, we're talking about one thing, and that one thing is oil. So if oil collapses below a certain price, and not just the Publixes out there, so in other words, not just these mining companies or these drillers or the transport and everything that touches oil, and the little sub companies or subsidiaries or Again, just two different companies working together. You guys produce the oil, we'll ship it for you, or we'll go and mine it, drill for it for you. You got these agreements. Those agreements stop when this company that produced the oil essentially and ships it off says we're going bankrupt. Can't survive on these low prices of a barrel of oil, which then stops this guy. Oh, but I got other contracts. I got other people who do what? We drill for oil as well with or for. And if that person at $30 or that company at $30 oil and that company is also $30 oil, I'm sorry, what did you say? You had some other clientele? No, you don't. You thought you did. And you're going to quickly find out they're all drying up. So when you take the price of a barrel of oil down to below 30, when even $50 and $60 a barrel oil would be pretty devastating to all of the oil producing countries of the world, you go ahead and squeeze that down to below 30. That means you're trying willfully to do something in a hurry, and that is bankrupt the whole damn world so they can usher in the New World Order. You can't do that if everything's okay. So you take the number one resource of the world, oil. Many countries in the world, 70, 80, 90% of their exports, some even more than that, are reliant on the price of oil because they're exporting oil. So while we're talking about like these charts I'm going to show you, stock market crash of this and that, what do you suppose is going to happen when this round comes, right? You're already seeing the markets failing, bank stocks failing, you name it, paper assets failing. Deutsche Bank, walking dead man, so to speak. And you have sub $30 oil when economies need at least $70+ a barrel to survive in the world with, as far as oil prices go. You have massive losses of jobs, businesses, companies, all because of the price of oil. So we're going to have a market crash with incredibly low oil prices. So it's going to make that sting, a little knife jabbed in you, a little turn. That's the equivalent of this. Because you could have the banking, stock markets, all of it collapse, economic collapse, without touching commodities. You could say, you know what? The club could. We're going to leave all commodities alone. Oil, gold, copper, all the metal, we're going to leave them where they are. Just kind of leave them there. As in like a year ago prices. And still have the Dow Jones and this one and the FTSE and this all that crap, world markets collapse. For the same reasons they are. Massive amount of debt, all these countries, all these markets, governments pumped in money into them. Quantitative easing, just nonsense. But the bonus is the world is now going to see $30 oil. So while you and I say, oh man, $1.56 at the gas pump. $1.56 at the gas pump, man, yes. Are you really sure you want to say yes due to the casualties happening behind the scenes? Now you say that now, we all do, because we haven't really seen the casualties. I've already mentioned a few in recent videos about exactly what this oil is doing to countries and in our own companies in this country as well as Canada. So before you cheer those cheap prices, just understand the devastation that it's causing, not just locally, but worldwide. So again, according to these two charts, a default cycle in the U.S. is now inevitable. What's going on, Deutsche Bank? Speaking of the devil, Deutsche Bank asks in the bank's latest European equity strategy snapshot. Investors, Deutsche says, can't seem to figure out why it is that European equities have plunged by some 20% since peaking in November. The the usual suspects, I guess that's why I said the U.S., just the usual suspects, U.S., sorry about that. The usual suspects are trotted out. China, renewed concerns about NPLs, and the shocking realization that central bankers are more impotent than they are omnipotent. But the real problem, the bank says, is threefold. Number one, there's a very real risk that China finally throws in the towel on the whole controlled, orderly devaluation thing in the face of worsening capital flight and simply moves to a float to relieve the pressure. Number two, global stock growth is stuck in the doldrums. And number three, the U.S. is about to enter a default cycle. Again, the whole world's already experiencing this because of the oil, thanks to the fact that the country's uneconomic energy producers are all about to go bankrupt in the face of shrinking borrowing bases in a high-yield primary market that is suddenly slammed shut. Remember, this is a collection of companies who are, and pretty much always have been, insolvent. The whole damn space is cash flow negative, which means if someone doesn't step in to plug the funding gap, the music stops. No more drilling, no more pumping, no more coupon payments. Game over. And no, when they say coupon payments, it's not going to be you calling your friend, Yellow, you got any Groupons? Like any Groupon deals? No. Different kind of coupon. Until now, Wall Street has stepped up to the plate with cheap cash and by providing access to what until recently were wide open capital markets. Now, all that changed. There's not enough yield in the world to entice investors to buy new issuance from U.S. high-yield energy producers, and the revolver raids that started in October will likely continue in April. Barring some sort of dramatic turnaround in oil prices, the defaults are coming. And as Deutsche Bank goes on to note, once the speculative default rate hits 4%, it's almost guaranteed to shoot up to 10%. Although we're only at 3% now, spreads are already at levels consistent with a speculative default rate of 5%. Have a look at the following two charts, which suggest that the U.S. is indeed entering a default cycle. And if history is any guide, and you know I love history, it's about to get very messy very quickly. I'm going to show you those charts in a second. Over the past 100 years, when defaults have risen above 4%, they have typically continued to rise close to 10%, i.e. a full default cycle. This is because of the tendency for credit stress to become self-fueling, such as a rise in expected defaults pushes up financing costs, which tips some marginal borrowers over the edge, further increasing defaults and so on. So I would like to share this little chart with you. As you can see, U.S. high yield spreads on the left at 840 basis points are consistent with a speculative default rate of 5% versus the current 3% and our strategists' forecasts of 7.2%. Of course, on the right, we have a chart from 1920 to, looks like present. And it says, since 1920, when default rates rose above 4%, they typically reached 10%. Only in 1986 did they drop back temporarily, while in 1970 they stopped at 9%. But, I mean, think about a 10% default rate. And I'm here to tell you, this isn't just going to be a 10% default rate in the oil industry. We're going to see a 10% default rate, period. You might even see far worse than that. Because if it's time for the club to at least get us very close to them, ushering in the New World Order, one world currency, etc., they have to make us all feel pain. We're not going to feel the pain of 2008, 2000 dot-com bubble, 1987 crash, even the 1929 so-called Great Depression. They would have ushered in the New World Order then. If those were painful enough, they would have ushered them in then. Or ushered the New World Order / currency, in then. See, all that time ago, they've been creating these things like the League of Nations, which is now the United Nations, and they've got the IMF out of Washington, D.C. All these global entities just out there ready to walk right into the New World Order as if it already existed. I'm going to see real quick if I can find this picture. 1988 Economist magazine cover. There it is. See if I can find a nice... yeah, that's a good one. Scroll down. Here we go. Here it is. Okay, yeah, I want to share this with you real quick. You need to see this. So let's get rid of that. Excuse me. Remember that? Get ready. This is the Club Rothschild, top of the pyramid magazine. Now, what does that say? 10 Phoenix 2018. Get ready for a world currency, it says. This was conspiracyclub.co is where I found this, just doing a quick Google image search. 1980 cover. I thought it was 1988, actually. Maybe it was 1980. Of a new currency emerging out of the Phoenix in 2018. Now notice those dollar bills, paper dollars, burning. It almost looks like different ones, now doesn't it? It looks like there's some different... See, you've got this feller here, with looks like some kind of Englishman from back in the day. Remember, like the old judges, and they'd put on their little wig. That's what we got over here. Then you got this guy. Got kind of the J Snip 4 balding thing going on. Then you've got this one, which almost looks like Abraham Lincoln. So that might be the U.S. dollar, $5 bill, right? So there's a pile of different currencies. All paper, all burning. What are they trying to tell us? 1980. I thought it was 88. I swore it was 88, not 1980. Let's see if that thing says it. It says 1980 on that one. I put 88, but other sites are saying 1988. Regardless. Or some people like to use the word that doesn't exist, irregardless. How long ago was that? 88, 98, 2008, 2018. 30 years to the date. That magazine cover. It's saying, get ready for a new world currency. And what do we have happening in the year 2016? And it's going to unravel, and then 2017 is going to come. And I personally believe that's when a lot more pain is going to come to the world. So that, again, they can usher in 2018, make the pain stop. This is painful. Please, we'll do anything. Our retirements have been destroyed. No more austerity, please. And the club will say, well, okay, we have a solution. The best and brightest minds on elected officials have come up with a solution. One world currency. And they're going to say, look at what happened with China. They had to devalue. Then this one had to devalue, and their exports went up, and they had to... If we just had one currency for the world, it would make life so much easier. It would be better for everybody. There's only one problem with that. All the pain and suffering is being manufactured on purpose so that they can bring this in. If it was such a good idea, why make the pain and suffering happen to the whole world? Why do they have to kill people? Why do they have to murder hitmen? Taking people out, right? Well, Judge Scalia died of a heart attack with a pillow over his face. Yeah, I sleep with a pillow suffocating my face too. Right. Anyways, a default cycle is coming. An economic collapse is coming. And you also know the key to having any chance of surviving that is owning physical gold and silver. And I hope for the million times that I've said it. Many of you have done it. I know a lot of you have. But I hope a whole lot more have than what I think have, honestly. Take care.